Okay, let's go ahead and get started. So, we're over here talking about risk management and pretty much what I do and my thoughts in risk management, how I kind of think of things, and I can hopefully transition that into your guys' trading through sort of what I used to do when I had a younger account, smaller size. And yeah, any sort of questions, please interrupt me as always. I'm here to get you to learn. So, with that, does anybody have any sort of questions specifically that they want me to touch on during the session? Ideas? If I do, you can also just hold those ideas until the end. Maybe I will answer them on my own. What do you want to gain from this session specifically?
Like how to properly full port.
How to grow an account. I mean, that too, but yeah.
Okay. Okay. I have some ideas for that. And actually, Mystic, I think I will be able to touch on that too.
Fuck yeah.
Okay.
Maybe also like how much of your portfolio you should be putting into like a single trade.
Okay. You guys are gonna love my answer for that one. So
yeah, I was gonna say like I know you put different like percentages, like how to decide when to put 20%, when to put 30%.
absolutely. I actually cover all of those in the session. So if I end up having something that I covered, but you want me to touch on even more, definitely let me know. This is all for you guys. So here it goes. Ready? So risk management by me. We're going to be talking about how to structure, like how to kind of think of what percentages to add and all those ideas you guys just spoke of. Okay. So what is risk management and why the hell do I even care about it? Risk management is literally everything in a portfolio. It will make you or it will break you. It's not just the typical 10% or whatever amount your buying power is per trade. It's not like, oh, if you have 10K account, you only use 1K per trade. It's literally all how you manage it. If you have a 10K account, if you have a 1K account, if you have a $100 account, I do not care. All it is literally what you do with the ammo in your gun. Do you want to kind of shoot with like a machine gun and use it like $100 here, $100 there, $100 here, $100 there, and then you end up using 1K with 10 different trades with $100 in each trade, and that's your whole 10K port or 1K port? Or do you just want one solid good trade that makes you good money, right? So if I have 10 trades, each with $100 everywhere, and I have 1K in my account, then I'm pretty much full account, full exposure in the market. And then, yeah, maybe one trade over here goes down like 90%, one goes up 30%, one goes up 120%, one goes down 40%. So you're all over the place and you're just stressing yourself out. You're stressing yourself out because you have way too many stocks that you have to take care of and have to watch, way too many positions. So I always kind of thought, why the hell would I use only 10% of all of my ammo? Right? I mean, do you only use 10% of your house when you're living in it? Like, probably not. So, like, why would you kind of treat your trading in a similar way? Or why wouldn't you actually? So, why wouldn't you just kind of use a larger amount of capital to gain one large amount of percentage on that instead of having just a bunch of different trades with small size? Like, you're never going to get to your goals by having tiny size in there. So, I'm going to touch more on that in the next few slides. Risk management is a sport, okay? It's literally an exercise. When you master it, it is extremely powerful, okay? Trading is not going to get you anywhere unless you are good at managing your risk. And risk management is not just, oh, how much percent do I put in each trade? It's a part of it, but that's not even the biggest part of it. You manage your risk every single time you decide to average down or sell. Every time you average up, you're selling into momentum. Anytime you kind of do anything with money in your account, you are literally managing the risk that you are like willing to take. So don't ever, ever, ever take any risk that you are not okay with taking, right? So you got to be able to use things like even implied volatility to sell into that momentum. That will get you more of a gain, obviously, right? Than if you just kind of sold after the fact and it dropped a little bit. Your contracts are down 20% from the high of the move or such and such. That kind of stuff really matters. Okay, so whichever direction makes you profit is really what risk management is all about. It's not just the percentage of your account that you use per trade and fire away at each opportunity. Risk management is literally an essential, often overlooked prerequisite to successful active trading. After all, a trader who has generated substantial profits can lose it all in one or two buttons. And without a proper risk management strategy, you're literally just going to shoot yourself in the foot. Like without the risk management strategy, you already lost the trade. Like you already lost the trade if you don't know how you're going to manage the risk. If you don't know, you don't have that plan set in stone before you get into the trade and you don't know how you expect to play this trade, you have already lost the trade. And I guarantee you, you're 99% of the time at least, your psychology is going to get thrown off, which is going to then throw your discipline off, which is then going to make you use more money than you wanted to originally, which is then going to lead to you losing a lot more money than you were okay with losing. And doing that over and over and over again will eventually lead to your blown account. You have to avoid that by simply focusing and keeping your emotions tight. Keeping yourself to a plan is so important, right? So if I'm dip buying, I always tell you starter positions, right? I don't tell you, oh, I'm in full size right now. Sometimes the dip is that good where I'm like, okay, I'm for sure about it. And that just takes experience to get to that sort of level, which it will all come to you all in due time. It's all about experience in there. And but yeah, I always tell you guys start a position. Whenever you guys know me, I do like hundreds of contracts at a time sometimes on the indexes, like the Qs. When I'm scalping them for same days, I'll do like a 50 to 100 contracts like almost every single time. But what do I do first? I'm not just putting my 50 contracts in there right away. I'm buying literally one tiny little contract. So when I'm down 30 or 45% on that contract, I'm down like 10 or 15 bucks. And then I'm banging and I'm hitting that $50 entry or 50 contract entry. And then my average is like I just entered the trade right there for the first time. So averaging down your cost is literally, if you're buying the same contract, of course, you don't always have to buy the same contract as your starter position. But if you do, then make sure that it's an amount of contracts that you're okay with having in the market that's not going to make you emotionally bonkers in the head, and also enough that you're going to be able to manage it mentally, focus on it still, and not be worried and not get caught slipping in the trade, right? So a trader, like I say, who has generated huge profits, they can lose it all in one or two buttons. And if you are scared and you're in with too much size, you entered and averaged in way too much because you were hoping that it's going to turn around, you already lost the trade and your account's going to get hurt. That's just how it works. So how do you develop the best techniques to curb the risks when trading? That's the ultimate question. First things first, of course, before we get into any more of that, I want to talk to you guys about commissions. This is also a part of your risk management, I guess. Trading commissions can stack up, and we trade often, right? So if your trading commissions exceed 25 to 35 cents, real quick question, just like a little bit unmute and me say I, if your commission is over 35 cents to and from. So like, let's say I want to buy a QQQ call for just one of them, how much commission would that cost you? Anybody over 35 cents here?
Fucking 65 cents.
65 cents. Okay, yeah, I'm gonna fix that for you. So okay, that's a lot of us, and I used to pay that too, and that's ridiculous. Okay, I now pay 35 cents to and from, not both ways obviously, but well, actually both ways, but not like only to buy and sell. It's to buy, it cost me 35 cents, and to sell, it cost me 35 cents. But most people, when they're brand new to trading, your brokerage is just a money hungry guy, you know what I mean? And that's just how they are. So they're always going to try to just make it sound like a more of a negligible kind of expense, right? But we trade a lot of contracts and we trade often. Like when I buy 100 contracts, I'm spending like $50 or like something like that, you know, sometimes. It was pretty crazy. Well, $35 ish, right? I mean, that's $35 just to play. And I don't even know if I'm going to make money on the trade yet. So that's crazy, right? It's really not that negligible. And I'm going to show you guys how I fixed my problem for that from 65 cents down to 35 cents. So obviously that needs to change. Since we're active, frequent traders, we should not be paying anything above 25 to 35 cents. So I built a tiny little script of how I remember I said it to them on the phone when I was on the phone with E-Trade. This kind of gamed my brokerage. I kind of just politicked them into keeping my cost of commission as low as possible. It's like a negotiation process, like literally like a business deal with anything in your life, you know, like negotiation. You have to say like, I lowered my commissions by complaining about the cost of commissions, justifying a lower commission by telling them I would increase my trades per month. So I told them, hey, I'm going to increase my trades per month. I just need a lower commission because this is just too pricey for what I can handle right now. Okay, I need to decrease the commissions from 65 cents to 25 cents because I trade very often and I like your platform and I want to stay on it, but this is just far too expensive, okay? And maybe even say like 15 cents or something. Maybe even say like something 20 cents. And they're obviously going to be like, whoa, like that's a little too low. And I'm like, why? I'm willing to be with you as a longtime customer, but only if you're willing to work with me and help me on my side with the commissions because I trade a lot every day. I day trade. So like I say, I might say something like I need to decrease the commissions from 65 cents to 25 cents to make each trade cost me 50 cents total. Thank you. And just like shut it down with a thank you kind of thing for them. And then they're going to respond by giving you shit. So they're going to tell you something like, oh, well, that is a little bit too low for us right now. And then they're going to literally look into your trading history and they're going to see how often you trade and how many commissions you spend. Like, I think personally, I've spent like about like 6 or 7,000 just on trading commissions. And if you guys go into your brokerage, you can literally see the exact amount of commissions that you've spent in your account. Whatever, if you have multiple accounts, it's obviously going to be different, so just add them together. But there's an area in there. I know in E-Trade, I know where it is in E-Trade, but so I pretty much told them that. I pretty much said once they gave me shit after that and told me that that's way too low what I was asking for, because I was asking for like 20 cents. I told them TD Ameritrade offered me 25 cents to switch from you over to them. So like, what do you guys offer that they don't, or something like that? Or like, you know, why would I stay with you, E-Trade, if I'm gonna get a better deal at like Webull or at like, you know, TD Ameritrade or something? You know, just game them. You know, obviously TD Ameritrade didn't call you up and say, hey, you can come join us, we'll give you for 25 cents commission only. No, they didn't do that, obviously. But you have to tell your brokerage that this other brokerage told you that they're going to do it for like half the price off 65 cents. So you kind of game them. And if you guys have any kind of sales or business experience, you guys know that kind of just gaming the prices with different competitors makes people kind of understand your kind of point of view on it. So that's pretty much what I said. I kind of just told them, oh, they told me that they would give me this amount if I switched. And then they kind of just went into the negotiation process of like, okay, fine, not 65 cents, let's do 50 cents. And I said, no, why would I do that? That makes no sense for me. Why would I do that? You know, like, why don't you just work with me, help me out, and I'm willing to be a long-time customer with you. Does that make sense?
Yeah.
Perfect. Any questions on this part? This is kind of important, so it's going to serve you in the long term, because I could have saved like, you know, a few $1,000s because I trade a lot, as you guys know.
Actually, I have a question about the last part. That's cool.
Yeah, of course.
Yeah, so like you already know I have like a smaller account, right? So like the idea of taking starter position is kind of hard for me because I feel like the contracts cost way too much, right? So like for me, I'd only probably be able to afford one contract in total.
Okay.
So in that case, should I just be more picky, or?
If I say starter position, then just wait like 5 minutes and see what the stock does. I would rather you miss the move than than catch it early and then lose money on it.
Okay, that makes sense.
You know what I mean? Like, yeah.
Just like a piece of advice for you: if you can't afford it, don't trade it. Stick with SPY.
Yeah, literally, SPY. Perfect. Thank you,
Okay.
Eden. Thank you. That's really important. Yeah, that's exactly what I would have told you too. Super, super smart. Just stick with whatever your account size is. Just there's contracts for everybody out there. The stock market feeds everybody.
Okay, cool. Thanks.
Yeah. You don't have to play like Facebook and all that Zoom and all that Moderna crap. You don't have to do that. Focus on the indexes. I actually included that in the session too. So, all good on commissions?
Yeah, and I'm dropping one more thing. Like that $1,000 account challenge I started will be strictly SPY.
Good.
Oh, I
Because
see. Okay.
I can't afford anything else with a $1,000 account. You can afford SPY, and SPY has Monday, Wednesday, Friday expiration, and you can still buy multiple contracts, still size in, still buy into Wednesday, and Friday, and still be able to afford those trades. You know, just stick with SPY for a little bit until you get comfortable trading, and then you can, as soon as your account starts to go, then you can size into other things.
100%. That's great advice, Eden. Thank you. Perfect. So, here's the bullshit that everyone tells you about risk management. And I haven't heard anything but this from any other place that I've been in, and anybody else that's told me about risk management. So, a lot of day traders follow what's called the 1% rule. Basically, this rule of thumb suggests that you should never put more than 1% of your entire account into a single trade. So, if you've got a $10,000 account, right, your position in any given trade shouldn't be more than $100. Like, are you kidding me? That's probably the dumbest thing I think I've ever heard in my entire life. And I've heard a lot of stupid shit in my life, but how do you expect to make money kind of doing that, you know? Like if you got a $10,000 account, you have $9,900 of ammo sitting there just doing nothing. Like what do you expect to have like 100 different stocks that you're looking at, each with $100 in them? That makes no sense, you know? That would be just too much to handle for a person. Why wouldn't you just rather use your account? Maybe if you have a $10,000 account, why don't you just use like 1K or 2K? Or sometimes if I'm really confident about a really long-term swing, like that Boeing trade that Money Matt told us to do the other day, right? We know Boeing has been hanging out over $200 a share for the last year. So it's at 188, under 190. Are you kidding me? Like that's for sure something that I would put $10,000 on for a swing trade for like a few months out. And if that's my whole account, then that's just a huge discount, right? And as long as it's a good, safe, in the money contract, I'm not going to lose that $10,000 if Boeing keeps dumping. I'll probably lose maybe like my risk, right? Maybe like 400, 500 bucks, maybe even $1,000 if it keeps on dumping, right? Which would suck, but yeah, if you have a $10,000 position, as long as you get the right contract and you don't just full account some $100 contracts at $100 a pop in same days, then you're probably not going to lose all that money. You know what I mean? Long, safe, in the money calls is the way to go when you're using more size than you are usually used to using, because that way you're going to lose money slower since the contract is more expensive and has better intrinsic value to it. Okay. So when I first started, to explain that point further, I managed my risk by doing this until I could successfully be consistent in trading. Okay, so yeah, when I was first using money and I never saw a chart in my life before, of course, if I had a $10,000 account, I wouldn't be putting 10 grand in this, 10 grand in that. I would literally be I would buy like one contract until I got my own strategies down to a T, to a point where I was so comfortable with them that it was really hard for me to mess up. I was only buying one contract. And then even after I got so consistent, I waited about a month and a half before I increased my size from one contract into 5 contracts or into 10 contracts, going heavier. So I was super, super frugal, super, super conservative with my cash, and just staying safe. That's all it is. That's managing risk. Not going heavy is literally risk management, especially when you're not ready to go heavy yet. Okay, so when I was ultimately ready and when I was first starting, obviously you guys know my story. I had that 2K account and I was swing trading the QQQ until I grew it up to like 5K, and then I had 5K ammo now. which I then used for a safe leap on the Qs again, on a good daily dip. Like right now on the Qs, we're on a really good daily dip, so that's why I alerted those starter position contracts. And if we open up here again, or even dump a little further, I'm going to add size, for sure. What do you think my 1K account is going to look like after the Qs do another crackhead rally past 408, where the all-time high is? You know, probably like 5K at least, right? Because I'm swing trading a safe contract. And you guys know those index contracts really are great. You don't need anything but the indexes to make money in the stock market. So right, I would use my 2K as ammunition to spray onto the most obvious trades, like a bull flag on the Qs, right? Obvious, right? The other day when we had that SPY 5-minute bull flag, a lot of us were in calls in that, right? That's just something obvious that you can use shorter expiries on if I was more confident. But if I was less confident and I needed a longer expiry just to have safety on the contracts, yeah, I would gain less of a percentage if I was right. But at least if I was wrong, I'm not losing as much money. So it also has to do with your confidence level when you're dealing with risk management. It all has to do with your confidence level. Like if you're more confident, right, you size up and you want to maybe even do a riskier expiry. Maybe. But if you're also very confident on like a weekly or daily or monthly time frame, like on Boeing, for example, and on the QQQ right now and the SPY, then maybe you don't even want to swing it. Maybe you just want to do short expiries and climb every single day like that. Or you could just be safe and buy leaps 6 months plus, maybe even like 3 to 4 months, but make sure they're close to in the money. The most important thing to know, never play with size you are not comfortable with, right? In options, we have to treat every single trade as if we will lose all of the money we put into the trade. When you press that buy button, that place order button, that money is gone. That money is in the pool. That is in the pool. And 95% of the people in the pool sink and never come back up. So are you okay if that's one of you? Are you going to survive if that's one of you? If the answer is no, then you have way too much risk in the trade. Way too much that you're not ready for yet. So just climb, stack it up. You know, stack it up until you're comfortable with adding size into that pool. Everything that you put into the pool filled with whales like Goldman Sachs and Morgan Stanley and sharks, like you gotta understand, like we're all in this together and they are literally hunting for your capital. So if you're not okay with that money just getting completely vaporized, like what if you didn't know Biden was talking that day and you're in calls and you went to go to the bathroom for 5 seconds and you come back and you're down 89%? Are you going to be okay with that? Like you're probably going to be very pissed, but can you come back?
Done that.
Everyone's
I've
been
done
there.
that. I was like, I had one of the expensive bathroom breaks once, like a few months ago.
Yeah. I actually remember that now.
Yeah, I
was
went to the bathroom, came back. I was like, holy shit.
Right. So when you buy an option, you have to be fully ready mentally and emotionally to say, if I lose it all, I'm okay. Like I could lose all this money and I could still be okay. That's the best trick that I used for myself, the mind trick, to basically say that holds me back from not buying too much money into a trade. Is being like, okay, like if I've got $5,000 in a trade, you know, I gotta stop. Like I'm not playing around. If I've got a 1K account and I have $500 in a trade, I'm not playing around. Like I'm not gonna go to the bathroom for a minute when I'm in that trade, and I'm gonna get quickly stopped out probably, right? Unless I have the right expiration, which means far, with time. So just train yourself to think that there's a possibility of losing every single cent. And we all know that that's a chance of happening. That'll just prevent you from oversizing and then hoping. A lot of the time, I'm sure this has happened to every one of you. If not, it will happen to you probably psychologically. When you're in that trade and you're thinking, oh, I'm just going to average down. I'm going to keep averaging down. Sometimes a trade could be a great 100% good looking trade, like a beautiful bull flag, and it could still just dump out, right? And if you keep on thinking, you keep on hoping, you keep on adding, then eventually you're going to look at your portfolio and wonder why half of it just got vaporized, because you kept on hoping and hoping and hoping. So have that stop loss. The bigger size that you put into a trade, the more you have to watch it. A lot of the time, like, we can get psychologically kind of exhilarated or just like kind of excited that we have so much money on a trade, and that would make us not want to sell, because maybe we're just down so much that we don't even want to sell it anymore. But I'm telling you, the only way to never be in that scenario is by cutting and entering when it's lower. Why wouldn't you just rather, if you're not sure of it, just cut it and enter it later? It's fine. It's not going anywhere. Just literally cut it and maybe consider another entry. No one's going to hurt you, except for the stock if you stay in longer than you should have. I would rather you guys just cut and re-enter than just be bag holding and your heart's racing and you're literally crying. There are no bag holders here. Okay? So, a huge problem right here. Everyone tells you not to bag hold, but when we are in a trade, like I was just explaining, and in with tons of size, we're hoping for it to come back. That's not okay. Money gets into our psychology so easily and so fast, right? Having a lot of money in a trade feels like you're in some sort of like spell, you know what I mean? Like, it's like your discipline just thrown out the window. Everything that you ever told yourself, all the mistakes you ever made from the past that you learned from, once you're in with a lot of money, that's the real challenge. So once you're in with more money than you're comfortable with, you'll literally bend your own rules, make you way too flexible with your stop loss. So screw that. Having more money in a trade means you need to be even more careful. You can't just be, hard eyes, money eyes, when you have a bunch of money in there. Because then you're going to end up taking the mother of all losses. So know that when you play with bigger size and you oversize, you're just making yourself vulnerable to ditching your discipline and more likely to lose more money. So don't play with what you're not okay with losing. If you're not okay with losing it all, don't trade it unless it's a super safe and obvious dip. The more confidence you have, there's no way. Like that IWM trade we did yesterday, Mal, that was epic because that was like an obvious dip. I've seen that happen multiple times in the past. I've seen that a million times before. So why would I not go heavy on that? And if I'm wrong, at least I know I was wrong very fast, because I know exactly what I was expecting because I've seen it a trillion times in the past. Like when you have 100K in your accounts, guys, are you going to buy weeklies? Probably not, right? You're probably going to use that ammo for like longer expirations. So you're increasing your probability of success by holding longer and safer expirations. And trust me when I tell you, when I had a small account, I focused on nothing but the SPY and the QQQ. I didn't care what DraftKings or Tesla was doing. Sure, they were mooning back then, but I didn't care. So was the SPY. And you guys know the SPY's only got one job in this whole life: go up. So focus on the indices, and there's no way you can screw this up unless you buy same days and you're looking at a tiny time frame and you didn't do your whole analysis. You got to do the full analysis. Are we good right here? Everybody good there?
Yes, sir.
Awesome, awesome. Okay.
Yep.
Psychology. It's all about psychology there. So how much are you okay with losing before you get stopped out? Every one of us has to ask ourselves the personal question: if I've got $1,000 account, am I okay with losing $100? Personally, that's my rule. I got a good 10% rule. That's me being okay with losing 10% of my account. If I've got a 1K account, I'm only okay with losing $100 on a trade. That way, if I've got 1K and I lose $100, that means I have 9 more chances after my first stop out before I blow my account. I've got 9 more chances. What are the odds that 9 times or 10 times in a row I'm gonna screw up? You know what I mean? Like, probably very low. So the only way you can blow your account is if you ignore your stop loss. It's impossible to blow an account unless you ignored your stop loss. If you just ignored your account, if you ignored your stop loss, you just don't deserve to even make money. Like, why would the market reward an undisciplined trader? The market does not reward the undisciplined. It will it will take from you because you deserve to be taken from, because you were not careful with your cheddar, with your ammo. If you're on the battleground, are you just spraying your last bit of ammo? Like, you got one little ammo cache left, and you've got 50, like, I don't know, opposing war enemies to fight, whoever they may be. Are you just gonna spray it, like blind fire it over the head, over like the cover you have? Like, no, they're gonna kill you after you run out of ammo. No, you're gonna snipe them. You're gonna end up looking at them downrange when they're not looking, and you're just gonna do it because you're careful with your ammo. You're managing that risk, and you're searching for quality opportunities that you can shoot at. You're not gonna spend your ammo on something that's not worth spending it on. That's kind of the analogy that goes through my head whenever I'm using size. Is like, I'm the last soldier on the battlefield, and there's 50 enemies left, and I have 50 bullets. So what am I gonna do? I'm not just gonna spray and pray. I'll probably die. So really, it's all in your head. It's all psychological. All of this. All of this. Like, the percentage you should use. I don't use 10%. I usually, honestly, if you guys really want an answer to how much percentage you should use on each trade, it really, two answers for you. One, depends on how confident you are in the setup. That'll tell you how much you should put in the trade percentage-wise. Maybe if you're less confident, maybe if you got a 1K account, only throw in like $50 or $100, you know, as maybe like a $25 starter position for like a $200 full position. Like, I'm just thinking about it logically, like how I would do it. And one thing that I've noticed recently a lot of traders in our chat are doing is they're waking up early, and they didn't give the market enough time to make its decision on the direction for the day. Like, if you guys just saw the cues today, like, you would have been able to kind of find that it was just rounding, it was slowing down the sellers at the end of the day, and you might have been able to take an end of the day trade. So if you're scared in the morning, if you're not comfortable being there in the morning, I'm literally in there all day. Don't worry. Like, you can come all day in the voice chat, or just tag me and ask a question on what I think of this chart, that chart. Just like utilize everybody in the chat as a resource to help you make money, because that's all this trading group is a resource of people to learn and make money together. So use it.
Yeah, and Pat loves it when you guys come for him, so just keep on coming.
Yeah, exactly. So yeah, when you guys are in the voice chat, I just feel amped. So it's awesome to see you guys there and learning. And don't just fire away. You know, don't be that guy. Don't be that soldier that just shoots all his ammo and has nothing left. Like, a lot of you guys are done with your buying power for the day very early, like after the first 30 minutes or hour. I'm like, why don't you just kind of wake up and be there? Don't sleep in. Wake up, be there, and hold your cash on the side and saying, I'm not shooting my bullets until I see a target that I know I can get. That's what I do. What do you think? Do you think I just fire away at everything? Like, I just fire away at anything that looks anywhere, anything? Like, no. I'm not taking it unless I know there's a huge probability that I'm going to make money off of it. An immense probability. I play with a lot of money, guys. I'm not just throwing it at anything. Like, when Mystic told me to take the Caterpillar swing today, I saw that opportunity. I saw that was a huge dip and a good double bottom reversal. And I thought to myself, I didn't just take the trade just because he told me. I looked at it and I thought, oh my God, this is a huge opportunity. And so that's why I put heavy on it. And so I was up like 21% an hour later, and I made like $3,000 off of it. It was great. That's because I was patient, and that was at that. What was that? That was at like 9 a.m. or 10 a.m. That was like 3 or 4 hours into the market.
Yeah, I was just looking for confirmation above. It was just like crossing a daily trend, and then I was just watching the hourly too. I mean, not the hourly. I was watching like 5 minute, 15 minute, kind of looking to see if I could find an entry, and then yeah.
Exactly. So if you're not okay with, like, just be there to watch the market and literally just wait and watch and just be there. Like, you're literally, every single day that I wake up, I'm just a prowling tiger just hunting for deer. I'm just out there hunting for the next best setup. Like, why would I tell you guys I'm buying something unless I thought it was gonna really work out? That wouldn't make sense for me. Like, I wouldn't buy something unless I was really confident about it. So with that percentage account that I do, like I said, when I had a 2K account and I was starting out, I would literally use them on a great daily dip, hourly good rounding dip on the QQQ or the SPY, and I would slowly add. I wouldn't just put my whole 2K in there right away. No, because what if it dips? Then I have no more ammo left to average in on the Qs. I would just do a nice long swing. And if you don't have enough capital, you have like a $600 left in your account and you don't want to add any more, okay, that's fine. Find the same dip that I'm looking for, and then when I say start a position, wait a little longer. I would rather you miss that move if it did work out right away. But you guys know when I say start a position, a lot of the time it keeps on dipping, and that's what I expect. And then once it keeps on dipping, then I'm saying, okay, I'm full size. Then you guys can consider, maybe I'll go ahead and do a little shorter expiry, and then I'll do my own way of doing a starter position. So I'll do my starter position when he says he's in his full size. And then, just manage your risk. Slowly add as you see comfortable, as you see fit, and you guys all have good enough experience in the markets. You guys can see when I'm buying, why, what I'm looking at, levels, anything like that. And if you don't, just ask me. You guys all know how I go about my starter positions, and when I do them, what usually happens. And then when I say I'm in full size, what usually happens. So just kind of use that to your advantage. So that's pretty much what my risk management session's about. Now, I want to open it up, of course, to the Q&A, and we can literally go through charts, we can go through examples, everything like that. Anything that's going to help you gain more from this session. So fire away.
Fuck, man, none of you got a question, really? All right, everybody want to know like why we started shorting the ETFs?
Why'd you short the ETFs?
Just some, but holy shit, who just said that?
Manny, what's up, man?
He wants to learn.
Manny, Manny, send me your fucking Venmo, man. I'm sending you $100.
What the fuck?